Well, good morning, everyone, and welcome to Bloomberg UK, a special focus on the biggest challenges facing the British government, the economy, financial services, and markets. I'm Francine Lacqua here in London. Now, the London's IPO market has been dealt another blow. WeSoda, the world's largest producer of natural soda ash, has cancelled its plans to list in the city just 2 weeks after making an announcement blaming extreme investor caution. Now, the move has dashed London's hopes of recovery from the ongoing IPO drought. It does come after UK chip design giant Arm decided to list in New York, and Bloomberg data actually shows that just under $600 million has been raised so far this year. Well, I spoke to the WeSoda chief executive, Alistair Warren, a short time ago, and he told me it would be logical for the company to be on the New York Stock Exchange.
The good news about our IPO was we attracted a very broad range of investor interest. The bad news, and the reason we ultimately pulled the IPO, was because whilst we were prepared to accept, the normal valuation discount that you get at IPOs, where investors got to was such an extreme position that we just took a view that the valuation just didn't make sense for us, and given that we didn't need the money, we decided to pull the IPO.
If you had decided to list elsewhere, do you think the IPO would have gone ahead?
I think within the European markets at large, I don't think it would have made a difference. I don't think this is a London versus Paris versus Amsterdam issue. I think it's an interesting debate as to whether the US would have been more supportive, but that makes no sense for our business today. So I think within the context of Europe, it would have probably ended up with a broadly similar outcome.
Well, that was the WeSoda chief executive, Alistair Warren, speaking to Bloomberg a short time ago about the company's abandoned London IPO. Now, we're joined by Laura Citron, chief executive officer of London Partners, and Ishita Kabir-Davies, the CEO and founder of Buy Rotation. So thank you both. We have a wonderful entrepreneur, and we have someone who's meant to sell London as a destination to a lot of businesses that want to come to London. Laura, first of all, how much of a blow is it to, the IPO market? If you look at a various stage, so you start a company, you need funding, you sell customers, you become bigger, you get VC maybe, money in, and then at some point, if you want to be really big, you list. What's the most difficult part if you want to do business in the UK?
So IPOs for tech do matter, and there's clearly an issue at the moment, and the government's acknowledged that, the London Stock Exchange has acknowledged that, and they're working on plans to fix it. But I think it's really important that we don't use tech IPOs as the only metric of success for tech in this city. And when I think about it as a city leader, why do we care about tech? It creates great jobs, it pays taxes to fund our public services, it improves productivity, and we create products that make people's lives better and help the planet. And if we look at it through that lens, tech has been a huge success story for London in the past 10 years, and we should be really pleased with that.
Yeah. Is there a danger, or as we move on, that actually tech is becoming second fiddle to something else, or that there are other places in the world, it could be Amsterdam for IPOs, not necessarily only tech, or France, that have rolled out the red carpet and so attract more business because it's just easier to get things done?
So London is still clearly the dominant tech centre in Europe and top 3 globally. We're raising about double the level of VC capital in London of Paris or Berlin that are the next 2 biggest. But I think more broadly, we need to compete as a European ecosystem to develop a European technology sector that can compete with the US and China, and increasingly actually also India. So from a London perspective, what matters to us is that we're really, really well connected with those other key tech cities in Europe you've mentioned, whether it's Amsterdam, Paris, Berlin, Stockholm, Tel Aviv, so that the entrepreneurs from those cities can come to London to raise their later stage capital, can expand, benefit from the market here, and use it as that gateway to the rest of the world that London has always been.
So Ishita, talk to me a little bit about your business. You have a business called Buy Rotation, which is basically a peer-to-peer fashion rental platform. You went through $3 million in terms of seed funding. Is it what's your biggest challenge right now?
Well, I would say we've just sort of expanded now to the US last month, and I think it's really about making roads in the US. We've got an amazing business model where it's very scalable. Everything's done in-house, headquartered here in London. And it's really about, kind of getting our name out there in the US. And I think what's been really exciting, again, being a startup that was born in London, is that if you can make it in London, if you can be a big fish here, you will make it in the US as well. And I can't really say the same for other markets. If you make it in another country, in the main city, it's not confirmed that you will actually have such a status when you go abroad to such a big market.
Yeah, and unclear. And we've seen also, tech not related to fashion, but you see a lot of the financial big banks trying out some of the retail consumer products here in the UK. And I don't know whether because we're just much more savvy and it's a good market to then roll it out, or it's just a harder market to penetrate and make a real difference.
I mean, I feel like the customer, the consumer here is really savvy. So if you can convince them, you can convince a lot of various other markets, and again, larger markets such as the US. So we definitely feel like the UK, which is probably 1/6, 1/8 of the US. If we can make it here, we can experiment here, we can use the lessons that we've learned and brought it to a bigger, perhaps more expensive market as the US. I say that as an early stage founder.
Laura, so I was also at London Tech Week. I know London Partners was heavily involved. I had a good conversation there with the leader of the opposition, Keir Starmer. What does government need to do now to make investors, maybe international investors, feel more welcome in the UK?
So government is really looking at what they can do to continue the success story of tech in the UK. So there's a lot of talk at the moment about how we can get our pension funds to be investing more into growth companies, and I think that's a really exciting area. Entrepreneurs talk a lot about migration, and London has always been this fantastic hotbed of talent. A lot of the investors that we talk to bring their businesses to London because you can recruit from amazing universities. But I think we look at the last 10 years in London, we have had more tech companies come and set up in London than anywhere else in the world. So we've got a really great mix of ingredients, and I think we need to continue to invest in it.
So when you look at some of the questions, and thank you, all of our viewers, I know we are touching on something that's very close to the heart of people that watch us, and we have viewers, of course, writing in with a question. And so, Laura, I think this one's for you. How do you think big firms like NatWest are performing about supporting IPOs in London?
So we've seen a lot of the big banks really trying to get into this high growth space. And on Monday this week, for example, we saw what was Silicon Valley Bank US relaunch as HSBC Innovation Banking. The reason that businesses do well in London is because they can get capital to grow. And that's something that's really changed. If we go back 10, 15 years, you could do an early stage startup in London, but you couldn't really scale. You just weren't going to raise your later series. That's really shifted. And we are seeing not only banks, but also institutional investors being much more active in that later stage market. That's really exciting for London. And that's why if we roll back to 10 years when London Tech Week started, we only had 10 unicorns, billion-dollar companies here. We've now got over 100. That's because you can now raise those bigger rounds.
So what are some of the questions that you're asking yourself, Ashita, right now? Are you already thinking about an exit plan, or are you just growing the business and see how it happens?
I mean, we're 3.5 years old, so there's a long way to go, I do believe. And you've got a lot of success stories in the circular fashion space. You know, you've got Vinted, you've got a lot of Depop now being acquired by Etsy. So I do think there's, we're just sort of growing, and the market is, fashion rental in particular is going to grow by 3x just by 2030. So that is something that we're looking to continue expanding.
Yeah.
With the US launch, I mean, we've been really dubbed more as the Airbnb of designer fashion. So the opportunity is a $100 billion company, really, in the sharing economy space.
But and this is a business model, right, that has been tried before. There was My Wardrobe, there's like Rent the Runway. What are you doing differently that will set you apart?
So both those businesses that you mentioned, they're very inventory heavy. So they have warehouses in Secaucus and Texas. We're talking about, connecting people, a social marketplace, really, also dubbed as the Instagram of fashion rental, where people can rent and lend with each other. Some of our top lenders make more than £3,000 a month as a side hustle of lending out their belongings to each other. And I think that's the beauty of what we do at Buy Rotation.
All right, thank you both. Laura Citron, the Chief Executive of London & Partners, Ashita Kabra-Davies, the Chief Executive and founder of Buy Rotation, both stay with us. So we'll have plenty more on Bloomberg UK.
The good news about our IPO was we attracted a very broad range of investor interest. The bad news, and the reason we ultimately pulled the IPO, was because whilst we were prepared to accept, the normal valuation discount that you get at IPOs, where investors got to was such an extreme position that we just took a view that the valuation just didn't make sense for us. And given that we didn't need the money, we decided to pull the IPO.
If you had decided to list elsewhere, do you think the IPO would have gone ahead?
I think within the European markets at large, I don't think it would have made a difference. I don't think this is a London versus Paris versus Amsterdam issue. I think it's an interesting debate as to whether the US would have been more supportive, but that makes no sense for our business today. So I think within the context of Europe, it would have probably ended up with a broadly similar outcome.
But had you tried to list it in New York, you think you would have had a better chance of going through it? Had your business model permitted it because of what? Is it capital flows? Is it investors?
Yeah, look, I think ultimately the issue in Europe is that there's a very high level of caution because, frankly, the IPO market has been closed for such a long time. Obviously, there's been one or two and some notably sort of big name IPOs that have got done, but generally it's been closed. And I think that, you know, today there's just such a level of caution, such a fear of what will happen in the aftermarket that people just drive ever lower values. And what you really need is a group of investors that are prepared to look at a company on its strengths, its fundamentals, and have the conviction to step forward.
That was the WeSoda Chief Executive Alistair Warren speaking to us a short time ago about the company's abandoned London IPO. Britain's ambitions, though, as an AI superpower have been boosted. Generative AI startup Synthesia Chief Executive Victor Riparbelli has talked up the UK's ability to be an AI leader.
I'm definitely pro-regulation. I think we should set up the right guardrails for this technology. The UK has a lot of the ingredients required to actually be an AI superpower, which I think every government in the world right now wants to be an AI superpower. I think few countries have especially the talent density that we have in the UK. So I think that's something that would rule in favor of the UK actually having a good shot at being an amazing hub for AI moving forward.
Still with us, Laura Citron, Chief Executive Officer of London & Partners, and Ishita Kabra-Davies, the CEO and founder of By Rotation. So thank you both for sticking around. Laura, again, I mean, you focus in a lot of basically attracting business to London and the UK, especially London. And it's interesting to see the government, hear the government want to be this like AI super regulator. Does that attract business with it? Or because you're a super regulator, it actually means that there's less capital flows in this space?
I think if we look at the analogy of fintech, where London and the UK have taken a pretty innovative and progressive approach, that's actually really driven the growth of the fintech centre, because we've seen fintech businesses from around the world come to London to innovate in the regulatory sandbox. So if we can take a similar approach around AI, be the country that's setting those globally recognised standards, it can be really powerful for driving innovation. But as we just heard from Synthesia, regulation isn't the only factor that businesses look at when they think about where they want to set up. And for AI, talent is a huge driver. Yeah. And the fact that London's universities and the UK's universities are really strong on AI will also make a big difference.
How has Brexit impacted? And we talk about the skill shortage, and I don't know whether it is education and retraining, or is it also Brexit, meaning that, you know, so many Europeans have had to go back home?
So what we've seen in London is a shift in where our international students are coming from. We have fewer European students, but we actually have record numbers of international students. They're just coming from different places around the world. And entrepreneurs that we talk to, and we have thousands of entrepreneurs from around the world in London this week for London Tech Week, still find that London is a huge draw for talent. That's partly because of the universities and the students, but also because it's just a great place to live, so people want to relocate here.
Yeah, so what's your it is a great place to live. I concur with that. Ishita, when you look at some of the challenges going forward, what is it? Is it regulation? Is it attracting talent? Is it platform? Is it technology?
So I was actually just going to add, because I'm an immigrant founder myself, and I came here as an international school student, and I love the fact that actually now you have talent from all over the world as well, which is fantastic. I think the biggest challenge for us, probably more as a consumer early stage startup, is that there's less love for consumer startups, I will say, in the space at the moment. So I do feel like there's quite a bit of funding for health tech, fintech, but there's probably less of a focus on consumer, because the consumer is probably a bit mindful of how they're spending. But I guess lucky for us at By Rotation, you know, that's a tailwind for us, because people are reconsidering how they spend, and instead they're investing in higher quality pieces and then lending them out on the By Rotation app.
Okay, so interesting. Thank you both for joining us. Laura Citron, the CEO of London & Partners, and Ishita Kabra-Davies, the CEO and founder of By Rotation. Now, Bloomberg is compiling a list. This is very exciting. We're compiling a list of the UK's most promising startups. If you know about a company that's doing something really innovative and unique and deserves some extra attention, let us know. You can email us at ukstartups@bloomberg.net. Coming up, AI is all the buzz, and next we'll speak to someone who's right in the middle of it. Stability AI Chief Executive Emad Mostaque joins us next live from the Founders Forum. This is Bloomberg.
The worst scenario would be a Europe that would invest much less than the United States or China, not be able to create the great champions, but instead a Europe that would start with regulation. This scenario is possible. It is not the one we stand for, and it is not the one I will support.
Well, that was French President Emmanuel Macron warning that Europe should not fall behind on AI at the Vivatech conference in Paris. Now, let's have a look at the UK. There are a couple of stories that we need to really focus on. First of all, the UK grid expecting renewables to curb blackout risks next winter. Now, this is a great story by our Todd Gillespie. Basically, lower demand could also play a factor in maintaining a reliable system, and a national grid ran a program last winter for households to earn money for reducing power use. This is a great story that we're, of course, looking at. The forecast is indicating more breathing room for the UK, whilst at the same time navigating out of this historic energy crisis that triggered record bills for consumers and intense demand on supply. So let's take a look at what the markets are watching out for today. The ECB rate decision, of course, is on everyone's mind. It's expected at 1:15 p.m. UK time. That's followed by U.S. initial jobless claims data for the period to June 10th, back to the ECB after that. Of course, the ECB President Christine Lagarde will hold a press conference at 1:45 p.m. UK time. You can watch that on Live Go. U.S. wholesale inventories, of course, for April come in at 3 p.m. And lastly, a NATO meeting between defense ministers kick off in Brussels today. So investors, chief executives, political leaders meeting at the Founders Forum to discuss the future of the tech-enabled industries. Unsurprisingly, AI dominating as one of the hot spots at this year's event. Well, let's go to our Tom McKenzie, who's at the event with an important guest. Tom.
Francine, thank you very much indeed. Yes, very pleased to say I'm joined by Emad Mostaque, who's the CEO of Stability AI. You can put them in the same category as the likes of DeepMind, as the likes of OpenAI in terms of developing these AI generative and LLM AI models, and it's an open source platform and model that you are building out, Emad. I want to get to your views on the opportunities, the risks, the regulatory environment. I have to start with the investigation by Forbes. They claimed in their piece that you exaggerated some of your claims, that you, in fact, even misled your investors. Your response, Emad, to that piece, to those accusations?
I think it was pretty sad. We posted a response, and we've got lots of announcements coming out directly addressing things such as our amazing Amazon partnership, the models that we create, and more. I think it's going to be increasingly important as we move to a more AI-generated age as well, to use this technology to really separate the fact from the fiction and others. So on the one hand, you will have more and more spurious claims. On the other hand, we can use this technology to really break these things down.
I've spoken to a number of people who've met you face to face. All of them uniformly say he's an incredibly bright, intelligent guy. He's a visionary. But there is a question, Emad, about whether there is a bit of a propensity to exaggerate. Do you accept at least that there has been some exaggeration?
I think I get excited, but you know, there are things like my MA is in the Post from Oxford and others. This is an exciting area, but I try to keep factual at all times. And again, I think the truth is always out. You just do good things, you stick to the truth, and you go from there. What
do you think about the risks around AI? Do you align with the likes of Jeffrey Hinton? Do you align with Elon Musk, who says you need a 6-month pause? Do you worry about extinction as a result of generative AI?
I was the only person of the major AI CEOs to sign both letters calling for a pause, because while my base belief is that we'll be okay, what if I'm wrong? I think we're feeding these AIs junk. We're scraping the whole of the internet. Like yesterday, there was a report in The Information about OpenAI using all of YouTube to train GPT-4. No wonder they turn out a bit weird. We need to feed them better data. We need to do it now before it goes from OpenAI and DeepMind training those models to dozens of companies.
Joe Lonsdale telling us earlier that he thinks the EU could be committing regulatory suicide with its AI plan. Do you agree with that?
I think it's making it incredibly difficult for innovation in the EU. Again, I agree that there needs to be some regulation and guardrails, but this is empowering the incumbents with the latest act that was released yesterday. And unfortunately, I mean, that includes us. It's beneficial for us because we're coordinating open source AI. But this is required for productivity gains that will drive economic growth going forward. So make it easy to enable that, otherwise you'll fall behind your competitors.
How do you compete with the likes of Meta, with the likes of OpenAI? They have all this investment. How are you competing? And are you raising additional funds? Do you need to raise additional funds?
We have constant interest for additional funding. At the moment, we have not needed it. We will scale eventually. The way that we compete is that we've built communities and we create open source light models that work on the edge as opposed to gigantic models. And I think the industry is moving towards that swarm dynamic. The other part is that you can't use private Bloomberg data with OpenAI and many of these other proprietary models. For every regulated data, every government, they will all run on open auditable models. So our market is completely different and much larger than all of them. And so that's been our focus.
So to be clear, you're not looking at additional funding, or you are in the process of trying to raise additional funds?
We have had consistent interest from investors. At the moment, we haven't opened up our data.
It's not more challenging right now?
No, we get messages every single day. We're the only multimodal AI company in the world, apart from OpenAI, and there's some very exciting announcements coming up.
Okay, Emad Mostak, thank you very much indeed, the CEO of Stability AI, really at the forefront amongst a number of others in terms of these generative AI models. Francine.
I love this. It's like, difficult interviews, but with the Sound of Music background. Tom, of course, on the ground at Founders Forum. We'll have plenty more from Tom throughout the day. Bloomberg Surveillance Early Edition continues in the next hour with Kriti Gupta in New York, Anna Edwards in London. A couple of other things we need to tell you about. There is a great podcast that I do with Dave Merritt called In the City. We do focus on tech, and of course, Dave also spoke to the London Mayor, Sadiq Khan. So that's out today. Check it out on Apple Podcasts or wherever you listen to podcasts. This is Bloomberg.